Hey everyone, welcome back to Corporate Decoder, the place where we decode the money moves that shape our world. Or in this case, make a pretty standard financial update a little more interesting. Alright, let's dive into American States Water Company's latest filing. What we've got here is a report from the 20th of February 2026, and it details some important moves they're making behind the scenes. Now, this isn't a super dramatic report filled with shocking news, but it does tell us about how the company is managing its financial agreements and setting itself up for the future. American States Water Company, known for providing water and wastewater services, is a pretty stable business. They are a utility, so they usually have predictable revenues. Think of them as the folks who make sure your tap water flows and your wastewater goes where it should. This filing of Form 8 is basically a heads up about a significant event happening to the company. The big story here is about an amendment to an existing deal known as an equity distribution agreement. Now, this might sound a bit technical, but stick with me because it impacts how the company can raise money. Essentially, on the 20th of February 2026, they updated an agreement that was originally signed back in February 2024. What did they change? Well, they swapped out one of their sales agents, a company called Janney Montgomery Scott LLC, and brought in Huntington Securities Incorporated. Think of these sales agents as the people who help the company sell its shares, its stock, on the market. It is like changing your real estate agent for a new one you think will do a better job. This change itself isn't earth-shattering, but it is part of a larger picture of how they manage their finances. This equity distribution agreement allows American States Water Company to offer and sell up to a whopping $200 million worth of its common shares. Imagine they have a big pile of their company's stock, and this agreement is like a contract with several agents who can go out and sell pieces of that pile to investors. And here is a key number. Out of that $200 million, they've already sold some, and there is about $40.7 million worth of shares still available to be sold. This means they still have the option to raise more money by selling more stock if they see an opportunity or need to. They can do this through what they call at-the-market offerings. At-the-market offerings simply mean they can sell their shares whenever they feel the time is right and the price is good, without a big scheduled event. It is like having your items listed on an online marketplace and selling them as buyers appear. This gives them flexibility. It is also worth noting that these sales agents and their partners are involved in all sorts of financial activities. They do investment banking, advisory services, and more for American States Water Company and its subsidiary Golden State Water Company. They've been paid fees for these services in the past, and they'll likely be paid again for future services, where companies often have multiple relationships with the same financial institutions. Now, the actual document detailing this amendment is available as an exhibit, which is like an appendix to this report. It provides all the nitty-gritty details for anyone who wants to see the exact wording of this new deal. That is where you'd look. This report also references a previous filing from February 2024, which gave more background on the original agreement. On a slightly different note, let's glance at what is registered. Their common shares are traded on the New York Stock Exchange under the symbol OR. This is important because it tells us where investors can buy and sell their stock. The filing also asks if the company is an emerging growth company. This is a classification for newer, smaller companies that get some regulatory perks. American States Water Company checks the box indicating it is not an emerging growth company. That is expected for a company with a long history like theirs. Finally, this report lists the exhibits accompanying it. The main one here is that amendment to the equity distribution agreement we've been talking about. There is also an interactive data file for the cover page, which is standard for these filings. So what does all this mean for American States Water Company? Essentially, they are fine-tuning their ability to raise capital. The fact that they have a significant amount of shares still available to be sold under this agreement, around $40.7 million, indicates they might be planning for future investments or to strengthen their financial position. As a utility company, consistent access to capital is crucial for infrastructure upgrades, acquisitions, or managing debt. This amendment, while a procedural change, keeps that funding avenue open and potentially optimizes who helps them do it. Looking at American States Water Company, they are a solid utility with a consistent business model. Their strength lies in the essential nature of water services, which typically provide stable, though not explosive, growth. The company has a long operating history and a well-established presence. A key risk for any utility company, including American States Water, is regulatory changes. Increases in operating costs, or conversely, limitations on their ability to raise rates can impact profitability. Environmental regulations and water availability, especially in regions like California, can also pose challenges. However, The company's ability to use at-the-market offerings suggests they are financially managed. They are not in a position where they need to urgently sell shares, but rather they have the flexibility to do so strategically. This gives them an advantage in managing their capital structure. In conclusion, this filing is a minor but important update. It shows American States Water Company is actively managing its financial tools, ensuring it can access funds if needed. It is a sign of good financial housekeeping rather than a dramatic strategic shift. The company continues to operate with a stable, regulated business model, and this amendment simply ensures their capital raising mechanism remains effective. Alright, that is our breakdown of American States Water Company's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they'll utilize that remaining offering amount soon? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord link in the description for more community discussions. Thanks for watching. See you next time.